All right, Jeff, welcome.
Thank you.
So you just joined Founders Fund 4 months ago, right? Pretty recent.
Yep.
And how did you end up at Founders Fund? I mean, that must have been a big leap.
Well, my background was in the global macro hedge fund space, and I first worked with Peter Thiel's Clarion Capital in research and trading, and later on with Mike Cagney's Cabazon Investment Group as a portfolio manager. And in the global macro hedge fund space, you're often diving into different parts of the market that don't quite make sense. And you're looking at something like, oh, the crude oil spread between WTI and Brent is very strange considering the inventory levels. And then you look a little bit deeper and you realize, oh, I just didn't know about floating storage or something like that. And this seems pretty similar to diving into a different geography and learning about a company in the space and their competitors and figuring out if
So
there's something there.
the analytical part of it is similar in some
Yes.
sense. Yeah. And then how did it end up, the transition? I mean, that must have been like a big step, right?
In some ways, yes. In another way, it's being in Silicon Valley, you can't really help but be investing and advising various different companies. This is just doing it on an institutional scale.
Right. And so why did Founders Fund want to bring on someone to look after Asia? It seems like quite a transition. It seems like Founders Fund has made investments primarily in Silicon Valley. There's a few of them outside of Silicon Valley, including Spotify, for example, or Nubank, I guess, in Brazil, but not really in Asia. So is Asia in the agenda over the next couple of years? I mean, are you looking to really expand over here?
Well, Founders Fund's been looking outside of Silicon Valley for some time. They're looking at Austin, there's Oscar in New York, there's a Canadian company, there was DeepMind in London. So they've long been looking at countries around the world, and as they've expanded their team, they're able to look at other ecosystems. And it's also the case that as these local ecosystems develop and the funding is more localized, there's no chance of being able to wait and hope the companies come to Silicon Valley.
Right. So you got to go out and find these unicorns in the rough.
Or just find them and understand the context for when they do come in as well. Because I think people were telling me stories about bringing Didi through Silicon Valley or bringing Grab through Silicon Valley and no one really understanding what they were about because they didn't have the context of what was going on in those local ecosystems.
Right. Man, wish Didi would have come across my desk. That would have been awesome. And so, it seems like, just generally speaking, a lot of top-tier Silicon Valley firms are looking at deals outside of Silicon Valley. And I remember it was probably 3 years ago or so, I was at an event where there was a panel discussion, and there was someone from Silicon Valley that was saying that if you wanted to be a trader, you go to New York. If you wanted to be an actor, you go to Los Angeles. And if you wanted to be an entrepreneur, you have to go to Silicon Valley. Basically implying that if you want to be at the top, you have to go to Silicon Valley. And now it seems like the trend is actually shifting where a lot of Silicon Valley investors are looking outside of Silicon Valley, not just outside in the US, but outside globally. So it's very much becoming like a global business. Do you think that's still the case? I mean, do you have to go to Silicon Valley to build the greats now? Or is the trend basically seeing that there's actually opportunity outside of Silicon Valley, especially you can now scale outside of Silicon Valley?
So that's a complicated question. We have debates about this a lot internally all the time. My perspective is that if you want to be an entrepreneur, you really should join a rocket ship company. And there's a lot of rocket ship companies still in Silicon Valley. And so it's a great place to go for that. But there's also very high housing prices and very high opportunity costs for engineers who are being given $1 million offers by some of these other local companies. So for people who want to then start a company, seems to be plenty of opportunity for them to do so elsewhere where the labor costs and the housing costs are significantly lower.
Does it seem like it's reaching a tipping point there where it's just like, okay, yeah, there's a lot of smart people, there's a lot of money here, but it's just so goddamn expensive?
Half and half. There is still a lot of very, very interesting things going on in the valley.
Right.
But there's also a lot more reasons to be doing things outside the valley than there was in the past.
So let's unpackage the valley becoming the valley. So why is it that Silicon Valley became Silicon Valley in the U.S.? There's East Coast as well, right? There's Route 128. What was the difference that made Silicon Valley what it is today?
Yeah, that's an interesting question because when you look at like Route 128, Harvard, MIT, the Industrial Parkway there, they had Raytheon, Silicon Valley had Hewlett-Packard. Route 128, they had the first venture fund started in the 1950s by ex-Harvard, ex-MIT affiliated people, and you would have guessed that it was that area that would win. But what actually ended up happening was there was a General Data Systems and some other large companies that got built up there, but they didn't have laws that allowed employees to leave and start new companies. They had laws where people could sign contracts saying, I can't compete with you. And they had a culture there where they very much respected authority. Whereas in Silicon Valley, one of the famous groups was Shockley Semiconductor, where there was 8 PhDs that a Nobel Prize winning scientists recruited, and they left his company. He called them the traitorous 8. And they left his company the year that he was awarded the Nobel Prize for inventing the transistor. And then these people, they went on to form Fairchild Semiconductor, and then that was relatively successful, and they went on to form other Kleiner Perkins, AMD, Intel, lots of different top-tier tech companies. And you didn't really have that occurring back on the East Coast. You had a bunch of large companies, and when the market turned, yes, it's still an amazing place with lots of business being done, but it's not Silicon Valley. Whereas in Silicon Valley, there's a lot of different small companies, and some of them ended up being more dominant later on, like Apple's, et cetera.
I feel like there's a lot of similarities between the East Coast mentality and actually maybe Tokyo or Japan overall, where there's sort of this respect, this deep respect for the traditional, the old, the incumbent that's been there for generations versus the underdog. Whereas in American culture and maybe specifically in Silicon Valley, there's sort of this underlying energy and encouragement for the underdog. And it seems like, that's one of the reasons why in Japan you have some of the oldest companies in the world, right? Because they want to preserve what's been there for a while rather than breaking it down and starting from zero. But have you noticed that over the past few days? Like, do you feel like the energy may be shifting?
Well, that's kind of a biased question because you took me to visit a lot of your portfolio companies the past few days. And,
so yes, it's changing, of course.
No, they definitely were very, very impressive and reminded me of a lot of the top talent that we've seen in Silicon Valley. So it was very impressive to see that. But I think there was a strand of it was still very difficult for some of them to recruit in terms of getting people to want to join a new company as opposed to an established older company. Right.
Yeah, recruiting is definitely a problem. One thing that I've actually noticed is that when I left JP Morgan and I was telling people that I'm going to leave, my American friends were like, yeah, you go become Steve Jobs. And my Japanese friends were really worried about me and, are you going to be okay, kind of thing. It's very different. And, fast forward till now, the dynamics have changed quite a bit. And so people at JP Morgan or people at, some of the other firms like that are actually coming for advice on how to start a startup or joining a startup. And so that's changed. And it feels like the caliber of the talent has actually changed in the ecosystem. So we're optimistic. But I want to also ask you about some of the other ecosystems that you visited. So since you joined Founders Fund, you've also been visiting other parts of Asia. And I want to know which ecosystems actually have stood out to you and also why they've stood out to you.
So the biggest one is China, Beijing's startup ecosystem. And in America, you have companies like Google and Facebook, and when you see people who leave there, they've learned how to do things very well. And for a long time, I think all of Asia was semi-dependent on people who had learned how to scale companies very quickly from these types of companies and coming back to China and starting the companies there. Whereas now China has the BAT, Baidu, Alibaba, Tencent, and they also have a few acronyms of successful companies afterwards, where people who've come from those companies are also seen as having learned how to very effectively create large organizations.
Mm-hmm. And what about places like Southeast Asia? Those are emerging. China is like such a behemoth that it's on the scale of Silicon Valley, but there's other ecosystems that are emerging. I'm sure you've looked at as well, right?
Yeah, definitely. Other ecosystems are still in the more developing phase. They still seem, there's a lot of local talent, but there's also a greater dependence on the sea turtles, as they're called, the ones who...
What are sea turtles?
The people who go, they study abroad, they go to Harvard Business School, or they work at Facebook or Google, and then they come back to their home country to start a country.
They migrate back, yeah.
Yes.
And so, when I was investing on behalf of DNA, I had also been looking at markets like Indonesia, for example, or the Philippines and Thailand. And Indonesia in particular seems like it's really, really picked up. But I'm sure you visited Jakarta as well. How does Jakarta compare to places like Beijing or Shenzhen or Silicon Valley?
So some of this is biased from the perspective I have of coming from a $1.3 billion fund, where
right.
we have to find companies that are going to be multi-billion-dollar companies. And Indonesia, within Southeast Asia, is one of the few areas where there are multi-billion-dollar companies just within Indonesia. So.
And how are you thinking about things like? I mean, these are paper gains ultimately, right? There's a lot of money going into the region. Is liquidity something that you guys are on your minds, or do you think that'll just come as companies scale?
Well, it's not so much the liquidity as the dilution risk for some of these types of companies. Some of these companies are unicorns, but they've raised more than half of what their valuation is. So the later stage investors don't really have the returns that people associate with unicorns in other markets.
Right, that makes sense. And so it seems like a very luxurious problem to have, because here in Japan, there's only about $3 billion invested into startups, and the irony there is that one of the largest investors in the world is SoftBank from Japan, and yet the entire year of startup investment is just one check from SoftBank. It's just $3 billion, thrown here from Masayoshi-san. And what are your thoughts about scale in Japan? I mean, it's the third largest economy in the world. There's got to be opportunities to build meaningful sized companies for a fund like Founders Fund.
Yeah, it's interesting because there's been a pattern in the past couple months where we'll learn about a company, about what they're doing, and see that it was founded recently and look into maybe could this possibly be a fit. And very early on, we have to determine no, because it's already listed on the Mother's Index. So,
right.
Yeah.
And you don't want to take risk in a public company because it's a very different set of risks, right?
There's also some legal complications as a venture fund of putting money into public companies as well.
And so, when we talk about risk in general and investing in ecosystems outside of the United States, I'm sure there are things that come to mind, maybe particularly government risk, regulatory risk. How does Founders Fund start thinking about those things when approaching other markets?
So we've long invested in companies with potential government or regulatory risk, from Palantir to SpaceX in the US.
Yeah, basically own the government with Palantir. No comment, it's okay.
I'm not going to address that. But it really comes down to analyzing the specific company, seeing what their relationship is, seeing if they are working on something that the government wants them to be working on, or if there's strong pushback from the government, and figuring out how can this actually scale.
Right. And what were some of your immediate thoughts when talking to some of the founders of the past few days? Of course, it's biased. You've only met the best of the best because they're from our portfolio. But what are some immediate impressions?
The impression I had is that a very strong team. They seemed to understand what they're doing. They seemed like they weren't. The main difference I would say between what I've seen in Silicon Valley and what I've seen in these people that you introduced me to is that many of them weren't even pretending to eventually want to go out of Japan, whereas for the people in Silicon Valley, yes, they may be going after the US market first, but there's a natural progression to eventually taking over the world.
Right. Yeah, I mean, that's one of the challenges in Japan, right? It's this fundamental issue where there's very, very high language barriers and also very, very high cultural barriers. And so when we look at investments here in Japan, we want to do hyper-global investments or hyper-local investments, meaning that if it's hyper-local, it has to be a big enough market domestically for it to make sense for venture funds. And we're not $1.3 billion, so that might be a different scale than you guys. But those would be industries like healthcare, insurance, logistics, things like that. And then on the other side, there's the hyper-global, and that's space-related, where there's not enough of a domestic market. It's fundamentally a business that you have to expand globally. And when you think about founders in Japan that have to expand globally, you have to consider that they have to be able to speak English right from the beginning. And so some of the issues that we've seen is that you look at companies like Mercari or Smart News, for example, that they've done very, very well in the domestic market, but it's very hard to go global. I guess Rakuten is maybe even a better example, where they've built out the members of Rakuten purely as Japanese, and then trying to change it after the fact, and it's very, very hard to do. And so I'm just, I'm wondering, like, you've been to looking at ecosystems in China, and then looking at ecosystems in Southeast Asia, and it seems like Japan, like, this is like a very unique feature of Japan, where I remember you were mentioning that in China, the language barrier is there, but it doesn't seem as much of like a barrier to actually communicating with founders. Does that seem to be the case? Like, is it just me that I'm perceiving this?
It seems that there definitely is a barrier where people have more aside conversations in other languages in these other places, but it seems that there is a default more towards English in a lot of these other markets, especially on the technology side, compared to Japan.
So what would you encourage thought leaders in the Japanese ecosystem to do in order to build the foundation for companies to actually expand globally and get to the scale that Founders Fund would actually find interesting?
Well, part of it is just going after global markets, maybe from the very start, and not necessarily hyper-localizing.
Right. And what do you think that would entail? I mean,
so Japan, it is a $5 trillion market. So winning in Japan is very significant.
Yeah, it's important, right?
Yeah. But and that can be a very good result all on its own, especially if they're dominant in a large enough part of that market. But being able to hire talent and being able to go into these other markets to show that they are thinking more globally from the start would be a way to avoid getting locked into a path-dependent, only focused on Japan type of strategy.
And so, are there any particular industries that Founders Fund has been looking at, not just in Asia, but just in general? Are there particular trends that Founders Fund is interested in these days?
Actually, we're pretty sector agnostic. There's a lot of interesting trends going on in the world, and there's a lot of very interesting technologies that are being developed. But we're interested in looking at anywhere that amazing companies are being built.
And I'm trying to pry a little bit more here. So Founders Fund, is I think takes a lot of pride in being contrarian, being the first to discover that there's actually an opportunity in places that other people are not necessarily looking at. Are there any that, maybe that you've already made the investment and it's a great example of an area that no one had been looking at before?
Well, there is a lot of different things. And again, when you ask what Founders Fund thinks, it's a very difficult question because we have a lot of internal debates back and forth.
What does Jeff think?
So, for instance, I will say that I do not want to look at anything blockchain related, but there are people who are more interested, or who might be interested in looking at that. Whereas, but one of the trends I think that's been interesting, there's been some news stories about the Palmer Lucky's company where people in Silicon Valley don't even want to think about defense, and that's an area that if other people don't want to think about it, it's
so GovTech, for example.
Yeah, so there's the areas where people have an instinctive reaction against it. That's where there might be something interesting.
Vice Tech. Interesting. And do you think Founders Fund would actually consider Japan as a market, and how would you go about that? I mean, what would be the sort of requirements aside from simply saying, yeah, it needs to be a multiple billion-dollar business? What are some signals that you would look at in order to sort of feel comfortable that this could be a multi-billion-dollar business?
Yeah. So again, it's not like is Japan a market? Is this particular company in Japan?
Right, look at companies,
market? Yeah. So we're not going to say this is an overarching thing about Japan and we have this strong view on Japan. It's let's look at this company and is this an amazing company with an amazing team, and then go from there.
And are there any? I'd be curious to hear examples of are you familiar with the Nubank deal or the Spotify deal? how did those investments transpire, even though they were in other markets?
So in the Nubank deal, they had a thesis where they were looking for some new type of fintech, and they went around the world looking at the different types of companies, and they thought that that was a team and a market that would work. So they compared it to a lot of other different opportunities around the world.
So, but Brazil has got their own set of problems, right? Just on like economically speaking, that wasn't there must have been a consideration, and how has Nubank evolved out of that?
So I don't track that one as closely. I've tracked Brazil's economic problems from the macro trader perspective.
Yeah.
But and when you have a company that's working really, really well, even if the total market isn't doing that great, there can still be room for explosive growth.
And so transitioning back to Japan, I feel like I'm fighting this battle of Japan being the ultimate contrarian bet, where on a macro level, you have aging population and all sorts of other, fundamental issues from, just speaking from the macro perspective. But, it's still, as I said, the third largest economy in the world, and, very educated workforce, et cetera, et cetera. But what would you say to like the macros of Japan in terms of looking at it from an investment perspective?
So from a philosophical level, I really like that people in Japan are really pro-labor-saving technology, because there's the weird backlash in other parts of the world against labor-saving technology, because there's a fallacy where people they don't understand that there will be jobs in the future, regardless, and they're worried about jobs running out. Whereas in Japan, they're worried about the population aging, so they really want labor-saving technology. But when you look at economic history, labor-saving technology is the general way that we create wealth. So I really like that Japan is very pro and focused on that dynamic.
Right, pushing on the robotics section. And then what about just simply on immigration? So, there's one way to look at it where immigration could fill the gap. And then in Japan's case, if there are companies that want to really expand globally, maybe hiring talent from outside Japan is the way to go. But what do you think on that front?
I think that that's a political question that the governments need to address. There is obvious benefits from bringing in subject matter experts who can teach process knowledge to the other employees and help create the types of very high growth companies potentially. So if you're wondering about bringing in the best people in the world, that's one question. If you're wondering about people versus robots, or not even robots for labor saving, by the way, there's also software as a service companies that you can definitely cut out a lot of human labor with. And that's a more political question as well.
And are there any interesting robotics companies that Founders Fund has invested in that kind of fit this trend? Or just automation in general?
Yeah, I think there's been, I'm not sure about the exact names, but there is, I think in general you can categorize not just robotics companies into this category, but any companies doing SaaS or anything like that that's enable one person to do the job of multiple different people. And just going back to the very start, like Palantir enables an analyst to do what might have taken 10 analysts to do in the past.
So there's not exactly that, but basically we invested in a company that is building software for industrial robots to help out in commercial kitchens. So initially the application is for cooking takoyaki. Are you familiar with takoyaki? It's like a Japanese octopus ball.
Oh yeah.
Yeah, you know that one. But the idea is to expand into multiple areas, as in like flipping yakitori sticks or like washing bowls, like these basic things that nobody wants to do in the kitchen. They're building robotics for that, or the underlying software to do that. And when I go to San Francisco, I notice applications like this that it seems like it should have already been done in Japan, right? And one example is, for example, like Cafe X. Do you think that this is like broadly a trend where inevitably you're going to see more automation in retail, and is Founders Fund looking to make investments in that area? Because Japan has a lot of pride in robotics, so this is like a very relevant topic.
Yeah, I think that it's natural that certain types of human actions will be more replaced as time goes on, and the lower value ones that people don't necessarily want to do, if there's ways to automate that at a cheap enough price for it to actually make economic sense, is definitely going to be happening in the future. The problem comes when you wonder if it's going to be done at a cheap enough price to make economic sense.
Interesting. And then, so what do you going to different ecosystems across Asia, like, you mentioned ones that you felt like are, doing well and were impressive. What are some examples of ecosystems that, feel like have a lot of improvement to make, and what are those improvements?
So it's interesting. There's a lot of these ecosystems, there's both promise and problems. I don't think there's necessarily many ecosystems that have just problems. I think maybe there's some that are just, maybe that's the case in certain countries where, unfortunately, I've already had to decide that it's not necessarily as interesting until I see them in another country because the home country is under $100 billion GDP.
Right.
So there's that, but there is a lot of government risk in a lot of the Southeast Asian countries that it's not just the government doesn't want what's happening, it's that there are people inside who want to take their cut of various different transactions. And that's always very worrisome because it's very hard to scale a company when there's a toll booth. So one of the interesting things about China is some people complain about certain types of corruption, but there's been a lot of cases where people have taken ownership of companies, and that's it's still really bad from the perspective of the United States, but you look at it and you think that's a lot better than someone demanding bribes all the time. If someone takes ownership in the company, then at the very least they can be long-term greedy along with the company.
Right, so incentives are aligned in that front.
Yeah, whereas the misaligned incentives are what really break things when people try to take a cut of every single transaction. That really, really screws up an ecosystem and stops things from growing.
So going back to, we were talking about sea turtles earlier, and you're talking about in Beijing, you notice that there's a lot of companies that are started by these sea turtles that come back to start companies. But it also, I hear that that's less and less true, where you have founders in multiple markets, not just in China, where it's actually like local players, local born, local educated, and they're rising as the startup stars. And actually that seems to be like basically the case in Japan as well. And so I'm curious whether this sea turtle trend is just like the cusp of the startup boom, and in different markets, like, do you think that it's maybe not as, like, which markets do you think that sea turtle is still relevant? Which markets do you think it's actually not as relevant as it used to be?
So, yeah, there are definitely local people building amazing companies. There's no question about that. And I would say that the country where the sea turtle trend is probably getting less relevant, I think the first one would be a country like China, where they've built these amazing companies inside of China, and now there's people leaving those amazing companies who have those experience at those amazing companies, and they're able to do something similar at their next company. And so I think China is the first one where they have a lot more local talent, and obviously there's a much larger population. And I'm still trying to figure out Japan, to be honest, because it seems like things are a lot more localized here in general, and it's a lot less concerned with the outside world in some cases.
It's kind of a black box, isn't it?
In some cases, although it's less so, I think, than countries like China and India, where it's politically also a lot more complicated in those countries compared to a developed world country.
So Jeff, if there's any founders in the audience that want to get in touch and snag a check from Founders Fund, what can they do to get in touch with you?
Well, that's we generally like to find people through the network and through warm introductions to the network. And also, if they're just doing something amazing, they'll pop up on the radar, and then we'll reach out to them.
All right. Thank you very much, Jeff. That's it. Thank you.
Thank you.